and look forward to speaking to you, David, and seeing what you have, seeing your stuff. So there'll be tabs there. Okay, I see your screen. Waiting to hear your voice, David.
Okay, my voice is here. So what screen are you seeing?
I'm seeing your desktop.
All right, so let's do that. Okay.
All right.
Give me an introduction or just let me rip?
Sure, I did, David. I showed your website while you were getting some coffee, and said if you want to know about precious metals and silver, that you're the guy. You've been on every financial media, whether it's print or television, and all kinds of conferences. When people think about silver, they think about David Morgan. In fact, I'd like to open it with this question, David. I know that President Trump would love to have a peace deal with North Korea so that he could be a candidate for the Nobel Peace Prize. I'm just wondering how humbled you felt when they named the Morgan silver dollar after you.
Yeah, right. Very.
How was that moment for you, buddy?
Yeah, that was pretty good. Thank you.
Who was it named after? J.P. Morgan?
J.P. Morgan, yeah. I think I'd have to look. I don't.
So your great grandfather, same thing, right?
Something like that. Anyway, well, thank you for inviting me on. First of all, I am heavily associated with the precious metals, and I don't want to dissuade that in any way, shape, or form. However, I want to, at the very beginning, make it clear that what we do mostly is in the equity markets, some in the futures markets, and options and ETFs. And of course, you know, there's a lot of ETFs like double and triple the indexes at times. So we do all of that, and we sort throughout the entire resource sector. So even though the original website was called silverinvestor.com, I rebranded about 3 years ago to the Morgan Report, and the letter has always been called the Morgan Report, or actually that's not quite true. I think the first year I called it Silver Investor, and then the second year on, so for 19 years it's been called the Morgan Report. And the reason it's the Morgan Report is because we look at copper, we look at all the minerals, we look at everything. We were first in rare earth elements. And Dale, when you brought up the idea of North Korea, the first thing that came to my mind is an open secret that hardly anyone knows, which is that North Korea has an extremely rich rare earth elements base. Okay. So there is a lot of natural resource wealth in North Korea that very few people are aware of. And if this peace situation takes place, and I think it will actually, and I'm certainly hoping that it does, we may see more capitalism come into North Korea, and it's Korea instead of North and South Korea. And as most of us know, South Korea is quite industrious. So there is a possibility and a potential there for the rare earth element space to get a boost from the mineral wealth in that sector from North Korea.
More than that, the country, which has been in dire poverty, and that's why they always have to blackmail a world with weapons, is to get concessions. But if they just developed what they already have that hasn't been exploited, you're saying it could be a very wealthy nation. And I think that's what President Trump was saying without mentioning all the natural resources there.
Right. You're a sharp cookie, Dale. Well,
okay. So let me ask you this on the Morgan Report. So you're covering all different kinds of instruments now. Do you do that through subscribers? You inform your subscribers of potential ideas? Okay.
Subscribers only. I mean, I have two letters, so anyone that's on this call, you know, get on our free report. And I do some advertising on that. And you know, Dale, I don't know you really well, but look, it's not a sin to make money. I mean, everyone's got to feed their family, etc. And I monetized my free list years ago with the lawyers, made sure that I could do what I'm doing, which is I have a paid membership only site, which shows you a look over my shoulder, which is basically some of the charts I'm going to show today. Okay. And then I have a free list, which does some advertising, occasionally mining companies, sometimes coin dealers. And usually on the weekends, I always provide a free update over the whole financial spectrum, ending with the precious metals. So if you are, I don't want anything except the facts, ma'am, type of person, then disregard what I send out during the week and listen to the weekly update on the weekends, which takes all the interviews that I do that are allowed to go to the public domain, and you get that, which is, from my perspective, fairly valuable. So the inside reports are for active investors and traders. I do both, not many can. And we have top tier, mid tier, and speculative situations for equity investors. And then it's a look over my shoulder, since I'm not registered with the CFTC. I show you what I am doing and how I'm setting it up. And I don't give specifics like I'm going to enter at 310, blah, 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 blah. I'll use a chart and I'll say, if silver breaks above this point on the basis spot market, I will go long. And that's how I do.
Okay, I recall we were talking about a different matter maybe 2 years ago, David, after I'd interviewed you on FX Street. And I remember you telling me that you weren't expecting much to happen in 2016 and 17, but expected things to begin to heat up in 2018, 2019. Am I recalling that conversation correctly?
Yes, you are, and it's a few that's going to give me accolades. Certainly, I have. Well, no one is loved by everybody, and I.
No, you can't please all the people all the time, buddy.
No, but I've been more accurate probably than almost anybody in the industry, and certainly I've been wrong. I've picked every top in the silver market all the way up, and that's a fact. Bottoms, I've not been as well. I picked. There was an 1817 print. I forget how many years ago, Dale, you may remember. I got a pretty good memory. And that was the low. I called the low. It was a spike low, typical silver pattern, just fit to a T. And I was right for 14 months. That was the low. But month 15, it broke below 1817. So I was wrong in the longer term.
Okay, so you have copper up here.
Yeah.
What are you, obviously...
Let me get going. Sorry to interrupt. So I'm just going to kind of go. This is sort of what you get on the inside track if you're a premium member, which is, we have two memberships. Premium, which is everybody. I don't have the basic service anymore. I stopped it. And then I've got a mastermind, which is for fund managers and accredited investors, because we do occasionally financing opportunities where you get to buy stocks at a discount and you're an insider, and you have a restriction from the SEC to hold that stock because you bought it at a discount for usually 6 months, and you usually get warrants with it. So moving on, getting off what my service is. So copper, Dr. Copper, it's called. I like to look at things long term, and then I zero in on it. So obviously this chart goes back years, excuse me. And what we can see here is we got a top about 330 and a congestion area right around the 50-day and the 200-day moving average. So it's called Dr. Copper because it shows us usually very accurately what the overall trends in the world or global economy is. And if you've got strong copper prices, that shows the industrial side of the world economy is robust. And if you have, a falling copper price, you have indications that the world economy is slowing down. Is it 100% accurate? No, but it's very accurate. So now,
it wasn't, David. Your chart's an example, because I was turning bearish on equities during the decline in copper, because I was taught all bull markets are roofed in copper, and that was one heck of a roof that never caved in. So yeah. You're right. Sometimes the correlations work till they stop.
Exactly. So I think this is kind of a fun one to start with, and this is my own personal, stock trade account, stock charts account, excuse me. And so this is kind of the order that I usually present these in. Regardless of that, this to me, and Dale, welcome your comment, it's at a juncture of like, it doesn't know which way to go. We're basically in an area here where we're at the two major trend lines, and I use the 50 and 200 from stock charts because those are the fundamental ones that everybody else uses. So when I do my own work, I'll change this, but for talking purposes, it's very good to start with. So it's at a juncture of, I'm not sure which way the economy is going to go, which is pretty close to where we are today with the Italian banks having problems. And, what's the Eurozone really going to do? So I think it's a very good sign, or that's how I'm interpreting it right now. It's like, which way could it go? I'm saying I'm favoring down, not that I want to go down. I try to be objective about all financial matters. I can't. I'm biased to honest money and an honest financial system. In fact, that's my mandate. But the point I'm making is that we see this chart in an indecision pattern, I would call it. And the indecision pattern is, you could say, between 305 and 310, just generally purposes. So what I do, the way I trade, Dale, for everybody here, I'm not going to change the chart and draw it in front of you. You guys are all very smart. Is I'll make a arbitrary point like 312, let's say. And I don't know where we are today, so I'm going to presume that's, where are we today? 306. So I'd make a 311, excuse me, a 311, and let's say a 304. So if we got a move in copper above basis spot above 311 and it closed above 311 3 days in a row, I'd go long. If we're at 304 or 303 and it closed below 303 3 days in a row, I go short. Now,
why 3 days, David? Why did you choose 3?
Because
I'm big on 3. It's a number of completion.
Well, I'm a position trader, Dale. So like when I made the most money trading silver, it was when the channel was around 19. This is going into 2011. I think it was 2010. I'd have to look back. And I said, once silver breaks above 19, stays 3 days in a row, go long. So I went long at 19 and got all the way to 26. Pretty nice trade, especially if you got a couple on. And at 26, it started to balk out, and I didn't like the pattern. So I put a stop in, and then I got anxious and I got out around 26. And then they announced, the Federal Reserve announced QE2. I got right back in, so I got in and out at 26. I might have had some.
Okay. But why 3 days instead of 2?
Just experience, 40 years in this market, losing a lot of money when I started trading, making a lot of money after I calmed down and said the market knows more than me. Okay. And so that extra day is proven prescient at times, doesn't always work. I'm a little more aggressive on the downside. Usually the downside, if it's a couple days, I'll short. On the upside, the 3 days that saved me, I just went 17 was my mark. Silver closed 3 days in a row above 17. So on the morning of the 4th day, I would have gone long, and it dropped precipitously. So I did an update like this for my members and said, 3-day rule works most of the time, not every time when I'm not entering the market.
Okay.
So,
understand.
Yep.
Okay. So that, that way you feel more certain about confirmation, and it doesn't bother you if the move is already underway and you have to short it a little bit into the hole or reach for it on a breakout to the upside.
Exactly. Now, this is because that's my personality. That's what I'm comfortable with. So when I rode that market from 19 to 48, and I got out at 48, that's a nice move. Now, if you were day trading, you didn't get right in and, so I've learned to trade where I'm comfortable. And yeah, I always let the market tell me. This is a big feature of me or the Morgan Report. And I'm not the only one that trades this way. I'm not trying to make it all about me, but I am trying to explain that you have to really be self-knowledgeable if you're going to be a successful trader. And you have to be able to admit you're wrong and promptly admit you're wrong and move on. The biggest mistake I made in my youth was not admitting I was wrong. It's like, wow, fundamentally this and fundamentally that. Forget that. The market says different than you. Admit it and move on. And I like the position trade because for me, if I can get a trade that works for weeks or months, you're going to take a big score. And moving on to that just a little bit longer, Dale, I haven't read a lot about trading in a while. I still learn stuff. I'm not saying I know everything, but I've gotten comfortable with how I do it. But one guy, I remember, forget his name or I give it, that was failing, was a professional, and he was trading, and he had a really bad year or two. So he took a year off and studied everything he could. So he came back into the silver market, and he took out the middle, and he got into silver as something. I'm giving you the idea. I forget the exact entry and exit, but he got in at like 16, and he got out at 35, and he was only in the market for like a week. But what he learned was the trend is your friend, which we all know, and he used it to his advantage. So he didn't get in at 750 when it broke out, and he didn't get the 50 high. He just took a nice chunk from like 15 to 30 or 35 and walked away and finished. He said it to his wife, I'm out. She goes, oh, wow, he made a good, how did we do? Oh, no, we're out. We are done. I am finished. You are finished. We are retired. So this can happen, and I'm not saying trade futures to retire. I'm not saying that. What I am saying is that even pros can learn something or reevaluate markets, and taking out the middle isn't a bad way if that's your personality. So anyway, I'd probably overemphasize.
Yeah, don't try and retire on one trade is what I teach, David. Yeah, you know what I mean? It's baseball season, right, bro? So you know the biggest home run hitters, they're also the biggest strikeout kings.
Absolutely.
And the difference between baseball and trading is one strike, you're out, and that means you're out of money and you don't get up to bat again.
Right. No, I'm not. Thank you for that, and I probably should take that back and let me take it back.
I'll edit it. I'll have our editor edit that from the interview. Just kidding. But I know you're right. It only does take one, and trading less is better than trading more, in my opinion. Unless you
another big lesson for me, huge lesson for me. Yeah. I probably trade 3 times a year, and people, what? Because I invest, I do other things. First of all, I'm not at my desk that often. I'm traveling around the world all the time, and I hate having positions on when I'm traveling. It's just a pain because even if you got stops in that could be jumped, or it's just it's a pain. Anyway,
so where are you at on silver now, David? Why don't we just swing to it?
Let's go to gold real quick.
Okay, let's do it.
Here's gold. So we've broken under the 50-day moving average. Not a good sign. We've tested down to 1280. We're back at 1300. If you look at it from this perspective, it's just nasty. So I am going to change the chart on this. I'm going to go to 0 years, and let's just look at the last 5 months and update this chart real quick. And we're down in here. We're seeing some pretty big volume on a down day. Fairly well under the 50-day. I don't like it here. I think we got some more consolidations to do. I'm not going to be real happy in gold until we get above 1350, right in here. And the reason being is you can see how much congestion or overhead resistance there is up here. And once we break free and it's, 1350, you could say 1357, I don't care, it's the idea. You got to get above all of this congestion. Once we do that, then we're probably going to shoot to about 1450. And that's confirmation to me that we're back in the bull market.
Okay, like it. So any downside targets possible? So you're only going to buy strength. You're not going to try and buy value?
Well, the problem I've got is being a metals head and being, long only, and I'm not, because I do hedge, and I don't call it selling short because, all the trolls out there will, Morgan's out, because there's so many undereducated, uninformed, ignorant people that have very big opinions. Anyway, no, I would, for gold, I'd say, if we get down into it's not on this chart, but we get down into like the 1270 area, probably I'd probably have to put a hedge on. I mean, it's just not, I don't think we're in any big problem. I mean, if we go back and change this to let's say 2 years and 5 months, we can see we're still in an uptrend. So I called the bottom here. This is my 3rd call at the bottom, Dale. So it took me 3 tries to get it right. And there's that number 3 again. But there's the low, higher low, higher low, higher low, which is what? An uptrend. I mean, look, this is not me being bullish. This is the market telling me it's bullish, okay? So until we broke, say, 1240, I wouldn't get too worried. If we broke 1210, I'd really get worried. And of course, we broke 1130, then I don't know what's going on. I guess my worldview is incorrect. So that's where we're at.
I'm looking for about 1180. All right, so let's take a look at silver.
Yep.
And I do have a question, David. This silver gold ratio has been out of whack. It hasn't regressed to the mean in a long time. You have a view on the silver gold ratio? Because the silver shares, and I know you watch them, up until recently have been holding up much better than the gold shares or the juniors on both sides. Silver shares acting better than gold shares.
Absolutely. And bring me in if I lose that question. So I want to say a couple things first. It has to do with your question. So let's look at the HUI. Equities usually lead in a bull market. They're not. They're not leading. They're still in that kind of indecision pattern, I call it, underneath the 200-day, right, kind of at the 50-day. It's kind of a down-looking thing. don't like it. Silver, similar to copper, excuse me. Sorry, similar to copper. We're at that kind of in-between point. I mean, you can make a equilateral triangle this way. You can make a bull flag this way. There's lots of ways to look at this chart. But let me get to the ratio, which I think I have in here. There's a gold platinum ratio. There's your gold silver ratio. So let's look at this from a different perspective. Let's annotate this a little bit, and let's look at this for 1 year and see what that looks like.
And how do you execute a gold silver ratio trade either way in the market? In there, because you have 100-ounce gold contracts and 1,000 and 5,000 ounce silver contracts. I don't even know how to execute the trade if I wanted to do it.
Well, that's a very good question. There actually is, and I don't know the symbol. I give it to everybody on the call, but there is a gold silver ratio trade on the
an ETF.
It may be an ETF. I think it may be a futures contract, but there is one or the other. Yeah, they put that on a couple of years ago. I wrote about it in my newsletter, but very few people are aware of it. And if it's a big trade like this one is, I will do it physically. I mean, if I've got a roll of eagles or something, gold eagles, I could swap those for silver when the ratio is above 80. Right. And swap it back when it gets down to say 35. So this is 1 year. It's been as high as you can see here, 83, you could say. Yeah. I'd say 81, but those are true prints. It's just, momentarily, probably intraday. Anyhow, the point being above 80 is like ridiculous. So it's a good time to make that trade. And I love spreads. Spreads are less margin and easier for me. And that's me. I mean, some people out there may hate them. I don't know. Yeah. So that's that. We're, right here. We were right here, but was it favorable? You see it's red print. Now we're back up testing 80 again. So first of all,
40 is kind of like the mean, isn't it?
Yes.
Longer term, if you had like a weekly chart up there, 40 is kind of where it should be.
Yep.
Where it could go.
Correct. Okay. Yeah. So anytime you get in that 40 range, it's a good time to swap back. So if you swapped your gold for silver at 80, you swap it back from silver to gold at 40. And if you do that a couple, 3 times during a major bull market, you'll come out with a lot more metal. And I have done it. There's no such thing as 1.5 times. I did it in a kind of a schoolboy fashion, not a very big move once, and a rather substantial move one other time, this bull market. So getting to your question, first of all, and I can't answer why, Dale, so I'll have to use this analogy. It's just like Coke and Pepsi. Why does Coke have a higher multiple than Pepsi does? One's in a red can, one's in a blue can. They're both, dark colored sugar water, okay? Silver and gold aren't the same element, so it's not as good as the Coke Pepsi analogy I just gave. However, they're both precious metals, but they have different uses. Nonetheless, silver always sells at a higher premium than gold does. And then at the end of the market, a good solid gold company like Pan American Silver or First Majestic that actually mines the metal in a substantial manner will sell in the last bull market. I don't know what this one's going to do, at a multiple of about 35 times earnings. But a good silver company, I just said silver company. A good silver company will sell at a multiple of like 50 times earnings, whereas a good coal company like Newmont or Goldcorp will sell at 35 times earnings. So
where are they now, David? They after this bear run, what's the average multiple on gold and silver stocks now?
It's nothing near that, and most of them you can't even do PE because they're inconsequential, and that's most of the thing that anyone knows about the stock market and trading stocks and equities. Believe me, I have gone to school and I've done everything that you can do, and I'm exaggerating slightly, but I was taught from the beginning from Bill O'Neill of Investors Business Daily. I took his classes. I've gone options classes, all this stuff. The point is, I know equity analysis, and it doesn't work in the gold stocks. So everything that you know about equity analysis, applying the gold stocks, throw it out the window. And of course, I had to learn that by reading, rereading, and understanding, and looking and applying. And it's very difficult.
Maybe that's why people bet on the jockey management.
Yep. Yeah. Equity analysis, standard equity analysis on precious metal stocks only works at the end, which is what I just told you. When you look at a major company selling at those multiples at the end, when you can get a PE on these stocks, that's a good indicator that that's it.
It's over.
That's what I'll be doing for my members, right? And the hardest thing I've gotten, sorry to make this about me too much, but I get excited. I've been on your show in a long time and I appreciate it, is that when I call the top, I think, there will be loyal members that have been with me 10 years, 15 years that will want to absolutely nail me to the wall. Because the hardest thing to do when you have a emotional commitment to a market, which none of us should have, is to say, get out. Because the metals are almost a religious experience for a lot of people. And they aren't for me anymore. When I was in 20 to 30, it probably was, but not anymore. So when that day comes and I call the top, they'll be called, an Illuminati, a trader, but I don't care. Because my importance here is to make money for the people that follow my work. It's that simple.
Well, I'll tell you what, David, you've illuminated a few things for me today. So really appreciate you being here. If you want to show your website, that's a good time to do it now, and how people could reach you, get a hold of you. It's Stock Guru, @StockGuru with a number for your Twitter handle. What's the number? Silver Guru.
My Twitter handle is Silver Guru, no number.
No number. Okay.
No. Silver Guru is my Twitter handle. You can ask me. So I think a couple things. I'll try to be brief. I know I got the next guest. So here's the main site. If you just go over here and give me a name and an email address, you'll get a responder that says, yeah, it's me. You'll get on our free list. That's the best thing to do. The other thing to do is this blog. So right there, blog and podcast. Hit the blog. And they're like this. So here's one here, and this could take another minute. Does your pension fund have enough gold? This was an extremely important video. It cost me money. I had to hire the crew. It's all on me. It's for free for you. But watch this interview of why gold is important for portfolio balance. And I know you got another guest, so I'll sign off and thank you.
We're done after this.
Oh, okay.
I would suggest a different host next time, like me. Anyway, David, thank you so much for being here today, and I really encourage people that have an interest in this area and these instruments to take a look at what David has to offer. He's definitely a pro and an expert in this arena and has the experience. David, you can't learn experience, can you? It only happens with the passing of time and living through stuff.
Amen, brother. And I'll just add on to that. I'm going to have my cup of coffee, as you know. But people ask me, I turned 65 in January, and, I get the occasional, well, don't you wish you could be younger? Or wouldn't you like to, And I say, heck no. I paid the price to get here, and I'm not going backwards. I've got the maturity, the wisdom, and, of course, the aches and pains. But I look at them as badges of honor in a way. I don't want to go back and repeat those mistakes. Not that I don't make any now, but I've just got a much more settled attitude toward the markets, toward life in general. I'm looking at how I can help others, and always have had that attitude for years. But I enjoy being where I'm at, and I earned it. As you said, you can't unerase experience, and I've learned that I was stubborn in my youth, and I knew too much in my youth.
Yeah, ego. We had an ego. We were edging God out, EGO. And you know what, David? You know what, David? We have something else in common. We're the same age. I just turned your age, and I'll see you in the Medicare line.
Okay, sounds good.
Had a great time hanging out with you. The best combination is to have fun and offer compelling content, and mission accomplished, my trading warrior brother.
Well, thank you so much. It was a real pleasure on my part as well.
Thank you, David. David Morgan, everybody. Thank David, and that's a wrap. See everyone for investing.com Thursday tomorrow, and most of all, like David and I believe now, after going through all our trials and tribulations, don't just count your pips, count your blessings, and I'll see everyone tomorrow. Adios. Thanks again, David Morgan.